Inventory takes a big jump. Median home prices here in the Treasure Valley start coming down. Price decreases are happening all over the Treasure Valley too, and the Fed can't seem to handle the inflation rate. We're going to go ahead and tackle that and how it affects the real estate market right here in the Treasure Valley right after this. Well, welcome back after that short break, everybody. Mike Petras here, your star realtor of Star and the Treasure Valley, back with another episode of Mikey's monthly market updates for June of 2022. Now, if you are new to this channel, this particular episode will tackle what is happening in the real estate market right here in the Treasure Valley or the greater Boise, Idaho area, for those that are not familiar with the Treasure Valley term. So we have definitely seen some interesting things happen, especially over the last couple of months. Now we are seeing the median home price start to come down. The gap between buyers' demand and inventory is definitely growing as inventory really kind of almost doubles since last month. And when it really comes down to it, the Fed also cannot seem to control the inflation that is happening right here in the United States. So how does that all kind of rack into what we're going to see? And is this the beginning of the market correction that I've been talking about right here in the Treasure Valley? Let's go ahead and let's dive into that data and talk about it. Okay, so let's go ahead and let's start off with Ada County as we normally do. And let's go ahead and let's break down and take a look at the median and average sold price here for June of 2022. Of course, if we kind of take a look over here towards the end, this is what we really kind of want to focus on. And of course, the next slide, I'll kind of break it down to a 6 month to really show you what's going on. But you can see the trend now officially starting to go back down, especially when it comes down to the overall median home price here in Ada County. You can see the overall sold price or the overall average sold price starting to flatline here at the tail end. But as we go into the 6 month breakdown, we can see that even though the average sold price has gone up itself, the median home price, which again is the median, the middle house that's sold between the top and the bottom is where they find the median home price. We can see that we had actually an 11.52% gain, okay, out of all the total inventory from all the way here from January of 2022 to where we hit the peak here in May of 2022, where we hit 602,250. But we can see that number has come back down. And according to just running some percentages, we've seen that we've actually dropped 1.7% overall in the total inventory versus median and average sold. So the median home prices are starting to come down. One of the things is we'll get to a little bit later on. And if you actually saw the last video that I came out with talking about the top of the market, you can see that a lot of the active listings here in the Treasure Valley are starting now to take price decreases as inventory is on the rise. There's a lot more competition. And as the buyer's demand is really starting to cool, and a lot of buyers are more or less becoming nervous about jumping into the game. If we take a look at the total actives versus solds here in Ada County, you can definitely see that shot up. And what I want to point out here too is the amount of pendings. So the amount of properties that are already under contract are starting to now decline and come down. And if we're taking a look at the overall buyer demand, we still haven't hit the levels that we had, say, in January of 2019, but we are still now ticking down to levels that really, even considering that this is the hot season, that you would normally see maybe during the holiday season when people are not actively selling or buying due to the holidays. So that gap is starting to increase itself, which is one of the early signs of predictors of a market correction. If we are looking at this here too, let's take a look at our inventory levels that we had back in 2019. You can see that they're relatively high. We know that we got our equity gain really when it came down and COVID hit. People were out of work, people weren't selling their houses, but the demand stayed relatively high and really good. I mean, look at that. Look at those numbers in 2020. But look at our inventory now. We are well above over 2,000 homes for sale here in the Treasure Valley, which equates out to a total of 2.61 months of inventory. Last month in May, we were sitting at 1.7 months of inventory. So we definitely took a big jump here in Ada County, and the buyer's demand has definitely cooled off. So, and that is reflecting, as we saw, in the median home price starting to come down. If we're looking at the existing home inventory here for June of 2022, again, you can see the existing homes have shot way up. And again, our buyers' demand is starting to curve down during even the hot season here coming into quarter 3. Looking at those numbers for the total amount of inventory that we have in the existing homes here in Ada County, we're sitting at 2.34%. Now, a normal market has 6 months worth of inventory, but the way that we are jumping up in our total inventory overall, it probably will not be too much longer until we start shifting over into an active buyer's market. And it is definitely leaning that direction. And I'll cover that a little bit more as we get towards the end of this video. Taking a look at new construction, we are now hitting levels that we have not seen in inventory since 2019. And again, the buyer's demand here seems to be, again, tapering off as we are going into hot season. So there's a definite gap now existing between the inventory and the buyer's demand. So these interest rates and everything going up and the cost of living going up due to the inflation rates are doing their job. It is calming people from going out there and spending money or doing a lot of financing, having people more or less, when they're considering financing, pay in cash instead so they can liquidate that money, take it out of the market and start returning back to normal levels. But has the Fed actually peaked like they said they were going to last month? We'll get to that at the very end of this video too. So in new construction right now, that is actually the biggest inventory that we're sitting at. Now, are there a lot of spec homes that you can go out there and buy, right now? Not really. But in terms of like the lots that they're sitting on and what they want to be able to sell in pre-solds is definitely going up. And we are sitting at 3.26 months worth of inventory, which is really getting there. That's really, really coming up. I expect that to probably be in the 4s by next month. So we'll just have to stay tuned and see what happens. Now, if we're looking, what I wanted to add this time through is to kind of show you really, is it the existing homes that are losing their value, or is it the new construction homes that are losing their value now? Who's coming down? Who's really the loser in this aspect, more or less? And I do see the market correction coming. Again, if we're looking at the existing home rate here, we did see a 14% increase since the first of this year. But this month, as compared to when we peaked out in May of 2022 here at 586,750, we have came down to 570 in the overall median home price in existing homes, which really we're losing 2.85% in that overall value out of the 14 that we've rose up. Now, one of the things that I have said is that, yes, we did gain that equity. And yes, I still predict that probably we'll see about 5-10% in actual market correction value overall. And if we're taking a look at that from what we've gained at the 14%, maybe by the time this levels out, really sellers, you've really kind of gained 4% overall once it starts kind of correcting itself out. But again, that depends on the Fed. And right now, the Fed cannot get a handle on the inflation rate. We'll get to that as we go along. But I want to go ahead and point out new construction here in Ada County still seems to be a winner. And in fact, actually the median home price here in new construction in Ada County shot up. Now, do I expect that to flatline and start coming back down? We'll just have to wait and see, but I do expect that to start coming down. But if we're looking in just new construction alone, since the beginning of this year, it has risen the overall equity gain here in median overall home price for new construction has rose 17.2%, which is just absolutely crazy. If we are taking a look at the days on market, they are still low. It's still kind of indicating, a healthy market. But what I'm really starting to think now is, is with the reduction, okay, in overall buyers' demand that we are seeing and the increase in the inventory creating that gap, is it just because maybe not as many loans are being done and lenders have more time to be able to focus and concentrate on on particular loans and get them closed a lot faster? I'm starting to think that that's probably a realism. I would say reach out to your lender if you are thinking about buying and talk to them and say, well, hey, you just got maybe more free time on your hands, and go ahead and ask them. But that is going to be my guess with that in terms of why it's staying as low, because we do know that the buyer's market has been cooling and is definitely evident now that you can see in the median home prices coming down. Cancels and expires. This one's huge. Again, the cancels here in Ada County just took a huge shoot up, and actually nationwide, if you read some of the articles, you can tell that a lot of people are canceling the sale of their home because they're nervous. They're nervous about what is going to happen in this economy as it continues to roll forward, and they're comfortable with the rates that they got. I mean, if you've got a rate locked in at say 3% somewhere, coming up to say 5.6, 5.7, where it's really kind of I think it's 5.7 today. It makes you get a little bit nervous to make that lateral move. And considering that the Fed can't seem to control what is going on with inflation, it does make people nervous. So we did expect to see cancels rise, and they are rising, and they're rising nationwide. So overall, just to kind of break this down, the median sales price in Ada County is hitting $592,090, which is still up 12.8% year over year, which is good. I mean, the year over year, you also want to pay attention to in terms of how the effect is really happening. But if we look at the homes sold, we are down 16% year over year. So it is definitely showing that cooling in the buyer's market, and that buyers are not jumping out there. And you can see it in the inventory growth. Look at that, 2,135 homes actively for sale, and sitting at 192.9% year over year. So definitely it's on its rise. And the days on market, again, they're still low, but it just kind of makes me wonder whether or not lenders are bored. So going into Canyon County now, again, same trend. If we're taking a look at the average sold price here in Canyon County, we knew last month it was coming down, but look at the median home price, boom, we have definitely came down too. So is this indicating the start of the market correction? I believe so. I did come in and say that I believe that it would kind of usher in late Q2, early Q3, and so far I'm right. So we'll just have to keep watching and see what's going on with this. But overall, since the beginning of the year, since we peaked out here in actually April of 2022 at 476,500, we had a 12% gain. But over the last couple of months here in Canyon County, when it comes to the median home price, is dove down 6.61%. And I do anticipate that to continue to fall as inventory continues to go up and buyers' demand continues to go down. If we're looking at the total inventory between existing homes and new construction, you can definitely see that. Again, the buyer's demand is tapering down during the hot season. You can see inventory definitely on its way up, and the gap is creating. And if we're looking at the amount of pendings that are happening out there, we can see that's going down too. The amount of homes that are under contract. So it's definitely showing its cooling signs now. Just looking at a different graph here, again, the inventory levels in 2019, look where we're at now. We are definitely marching back up to normal levels. And if we're looking at what we had here in June for total inventory in Canyon County, we're sitting at 2.7 months. So just shy of 3 months total overall, to where we had 1.72 in May alone. So we jumped up a whole month worth of inventory. If we're looking at the existing home inventory, again, it's going up, hidden levels that we haven't seen. And the buyer's demand, again, is tapering down. And if we're taking a look at the total inventory that we have, is 2.1 months worth of inventory in existing homes in Canyon County. And if we move over into new construction, again, same trends. Inventory is way above what we had back in 2019, pre-COVID levels. And the buyer's demand is tapering down, and we're sitting at 3.86% total monthly inventory here in Canyon County. So the shift is on. The shift is on. Sellers, keep this in mind, that as more competition is hitting and it's starting to shift over into a buyer's market, and prices are coming now down. It's kind of creating a more or less cocktail that you should definitely consider, and sit down and feel free to give me a call. Love to go ahead and discuss this with you. Have we hit the top of the market? Yes, I believe that we did. I believe we hit it in about mid-June, maybe late May, and now we're starting to see the effects of it going the other direction. Looking again, just want to add this for Canyon County, like I did with Ada County. If we're taking a look at who's kind of like losing out here, if we look at the existing homes, they rose 9%. Okay, from here when we're at 390 at the beginning of the year to our peak at 425, which actually created from April to May, we rose 9%. Okay, in Canyon County. But over this last month, from this little dip that we have in the median home price here, we've lost 1%. So we're going to keep watching this trend and see how far it actually goes down. And if we're looking at the new construction overall, again, we rose up 18% actually in new construction from when we peaked out here at 549 in April of 2022, from the 465 in January of 2022. And this, between the last couple of months, between May and June, you can see that the prices in new construction have came down in the median overall 7%. So prices, if you're looking for a new home maybe in Ada County, SA to Canyon County, Ada County still seems to be on the rise, but I do anticipate that to flatline and start coming back down, like we're seeing happening here in Canyon County. So if you're out shopping for a new home, then Canyon County is probably a better direction to go and find it here in the Treasure Valley. Days on market, again, still low. It's still what would be indicating a healthy market. But again, I mentioned, I think that maybe just not as many loans are coming through and lenders are able to tackle them quicker. But again, we can see the cancels too on the rise up. Okay. And really the expireds, I've kind of mentioned this, is really sellers that are holding on firm to the price that they really want to get for their house, and their contracts are just expiring. And we can kind of see that ticking up on the rise. So definitely, I have mentioned this in prior videos, sellers, pricing your home, especially right now with as much competition as you got, out there in the market, is key to be able to sell it quickly and for the most money possible, considering how many price decreases are happening in both counties. Looking over the overall snapshot here, again, the median sales price in Ada County did come down. It came down to $444,990. But again, year over year, we're still up 5%, which is a good sign. But I do anticipate that shift. Overall homes sold at 442, down 26.1%. So we're definitely seeing the buyers cooling, and the inventory rocketing up again to 1.49.7%, sitting at 1191 homes on the market currently active. And then our days on market too, as well, sitting where it is. Okay, so now I just want to take this time and go a little bit further on. And as I mentioned, really as this comes down is to the Fed being able to handle the inflation. Last month, the Fed said that they anticipated this month to peak. Well, obviously that didn't. It went from 8.7 to 9.1. It is definitely on its way up, and the Fed is clearly taking it too easy. And there's a lot of economists out there that are saying that the federal funds rate should be at 5 to 7%. And right now it's nowhere close to that. And the Fed is actually talking about maybe by the end of the year, having the federal funds rate sitting at around 3%. Now, of course, when it comes to mortgages, they're looking at mortgage-backed securities, to where if you're looking at, like, say, credit cards, commercial property, stuff like that, the federal funds rate really kind of comes into that as per se to where mortgage rates are affected, not directly by the federal funds rate, but they just still cannot get it under control. If they were able to get this under control, I'd probably feel a little bit more comfortable about, how far we're really going to drop. I'm still anticipating about a 5 to 10% market correction, overall. But if they can't get a handle on this, then it might actually go a little bit further down. We're just going to have to wait and see. But right now, the Fed is definitely not doing its job. And the Fed actually kind of came out and said, well, we're kind of surprised, that this isn't working out. So is the Fed, or the Fed chairs, is Jerome Powell, the head of the Fed, or the Fed chair itself, is he doing enough to are they doing enough to, fix this all? They're really not at this point, because what they really want to do is they want to stave you off of really from financing stuff. And it's like a good analogy I heard a little bit earlier today is if you wanted to go, say, buy a hot tub, okay, what they don't want you really doing is taking out a loan for that hot tub. They want you to more or less pay for that hot tub in cash, to take out of your savings so they can take it out of the liquidity and basically get rid of that money. Okay. And that money did start from injecting $5 trillion or probably more from the COVID pandemic. So they are trying to get that back, and in record numbers, as we can see. But the good news is if we're talking about mortgage rates, interestingly enough, have kind of stayed relatively consistent here, and especially since this news hit today, that our inflation is sitting at 9.1. If we go back over here, and this is actually supposed to say June, okay, when the inflation report came out in June, boom, everybody was selling off their mortgage-backed securities, but you can see that investors were coming in and buying them back up. So as we know, or at least as most mortgage professionals know, and if you don't, here's kind of the general education that we have on this, is that really the higher the basis points or the cost for the mortgage-backed securities, the lower the interest rates are going to be overall. When these dip down to lower prices, the interest rates are going to go up. And as we can see, as the investor confidence is kind of coming back in, they're buying up these mortgage-backed securities. So who knows what kind of investors those are, private to the Fed to et cetera. They are kind of they're swallowing up, what's kind of available out there, raising up the price and keeping the mortgage rates really kind of at bay. Considering the news today, I really did expect to see interest rates shoot up, and usually they do about a week prior to when they actually come out with the news. But so far today, even though this news has hit, the mortgage rates are still sitting at about 5.7% for a 30-year fixed, which isn't terribly bad. So the investors are doing their job from what it looks like. And so if we look all the way back, to 2019, et cetera, and kind of following this timeline, we can see that the mortgage-backed securities here, we're sitting, around, 107, around there, and staying consistent up until the inflation really started kind of spiral out of control, and you can see that dumping off, and this is why the rates went up. Okay, but if we kind of come here to one of the first times the Fed made their adjustments, you can see it went down, but the investors kind of came back. And then in June, of course, it shot down again because they came up with a new inflation report saying they still don't have it under control, but you can see, boom. And well, this is the part in June that I was talking about where a lot of people got scared. They started dumping their stuff, but you can see the investors are coming in and there's some sort of confidence here. So with mortgage rates, I do anticipate them still to come up. Buyers, keep that in mind. But right now, they're hovering, and they've been hovering, at still not a rate that is just an absolute killer. Like if we were in like 8, 9, 10%, God forbid we ever got to 10%. All right. So last week I did come out with, are we at the top of the market? And I'm going to go ahead and I'm going to put that video towards the end. I do want you to go ahead and watch that, but I want you to see the differences here in just the last days that we really had going on in terms of how many price decreases we are seeing actively here and how much we are really truly shifting towards a buyer's market. Do I think a buyer's market is right around the corner? Absolutely. Do I think it's going to hit probably in about the next couple of months? Absolutely. I definitely see it there. The sellers are definitely losing their advantage as the prices are the inventory is going up. The buyer's demand is coming down. And in order to compete, you are seeing people decrease the prices on their active listings. I know on the last video, when I looked at Altos Research, Star Idaho, and I'm just picking on Star Idaho here, was seeing around 40%, okay, of the active homes that were for sale out here taking price decreases. Now we're at 56%. So that is definitely on the way up. And if we take a look at our little meter over here, boom, it is shooting down and it's definitely hitting that line. And really a buyer's market, once we hit that 6 months and start getting more maybe inventory than that, which I think is going to be a little bit lower than 6 months before we start seeing that buyer's market hit an overall inventory. But the buyers are going to have their power. So sellers, we're going to go ahead and we're going to talk about that. Buyers, sellers, investors, right, all in that. And my final thoughts right after this. All right, everybody. Hey, thank you so much for staying tuned with all that data. I know that some of these updates can be rather long, and I'd like to put in a lot of information that I can, but thanks for sticking in there with me. And welcome to my final thoughts section, or basically the summary of what you just kind of saw, where I'm going to go ahead and break it down for you in terms of buyers, what I think, sellers, investors, renters, etc. So let's go ahead. And first off, I just kind of want to say and summarize this. Do I think that we are starting the market correction? Yes. Yes, I do. I do think that my predictions were correct from earlier this year, that we'd probably see it a late quarter 2, early quarter 3, which seems to be coming to fruition. We'll just have to wait and see. Of course, I'm not 100% on anything pertaining to that. We'll just have to see how this market does. Could it rebound and some of these median prices start going up next month and more or less flatlining our market? We'll have to pay attention. But the way that I see inventory just absolutely on the rise out here and the buyer demand cooling off, I absolutely see this trend to continue. I do still predict that we'll see about 5 to 10% before buyers do start jumping back in, getting some deals while the interest rates still stay low. Again, the Fed is meeting here. They will probably end up raising the Fed funds rate. But as I mentioned throughout the course of this video, at least the investors are coming in when it comes down to the 10-year Treasury yields, 10-year Treasury yields, 30-year Treasury yields, which even though the 10-year is more specific when it comes to mortgage-backed securities, the investors are coming in and kind of keeping interest rates where they're at. So buyers kind of keep that in mind. And we'll just have to pay attention and really see if the Fed can tackle it. Right now, that is the big looming question. They said it was going to peak last month, and it did not peak. We have gone up to 9.1% as of today, which again, though, the mortgage rates stayed kind of where they're at, which is kind of, again, letting you know that the investors are there kind of flatlining it out in terms of mortgage-backed securities right now and where our interest rates really kind of land. So we'll just have to pay attention to that too and see if investor confidence shakes again, say maybe tomorrow. Usually it happens before this report comes out, but we'll have to see what's going on and watch the interest rates and see if they go up, which I anticipate that they do. So now that I got that all out of the way, buyers, let's go ahead. Let's start with you. Okay, buyers. So inventory is up, which means that you have a lot more selection out there, which also means that now that we're shifting out of a strong seller's market and getting into a soft seller's market, and eventually I think here in the next month, maybe 2, might start diving into that buyer's market aspect of it, which means now you are the ones in control over the transaction. So we could start getting you additional things like price reductions are happening all over the place right now. I do continue to anticipate to see those price reductions continue. So can you get your home at a cheaper value? Yes, you can. And at that point, can we ask, maybe for some other things that come along, like maybe closing costs starting to return and have the sellers pick up on those. It's not quite there yet, but I do anticipate that coming up in the future. So the concessions will more or less shift to you. Remember, when a year and a half ago, if you were out in this market or you were in that market and you bought here in the Treasure Valley, you were going up against maybe 30 other offers to get a house. Now the power is starting to switch back into your favor. So the shift is definitely on to a buyer's market. So buyers, keep that in mind. You'll have a lot more inventory out there to choose from, and you won't be in that fighting position, which you aren't right now. Unless, of course, there is really a fair marketed house, out there and people are really going after it and it's in the right price point. But that's a whole nother story to talk about. The other thing is that interest rates, again, and I'm beating this dead horse, are still really not super bad. They're still sitting and looming right now between about 5.6 to 5.8 for a 30-year fixed. I do say that you reach out if you're looking to buy and talk to your mortgage professional today and get in there. I do anticipate these prices to keep kind of coming down. I still predict about a 5 to 10% market correction, out here. But if we are starting from these figures, keep in mind that since January, in both in Canyon and Ada County, the overall home price has gone up. And the prices still haven't dipped down, to a point to get even close to that gain. So right now, even though they're coming down, sellers, keep this in mind when I talk to you here in just a second. What have you really lost at that point? Not a whole ton, but I do anticipate them to come down. But buyers, really, it's up to you in terms of when you want to come back into this market, but also it's going to be up to the interest rates. So keep your eye on that totally. But if you're looking to buy, feel free to reach out to me today. Let's go ahead and let's get you into a house. Sellers, you're next. Okay, sellers. Well, so it's definitely shifting. The times that we had a year and a half ago are definitely over. We can see that the buyer's demand here in our area is starting to cool, and inventory is shooting up and shooting up rapidly. Do I see this shifting into a buyer's market? As I mentioned with the buyers, absolutely. Yes, I do. Just in case if you pan forward to the video in this particular section. So what does that mean for you? More inventory just means more competition. And right now, the competition is fighting by lowering their prices, okay, to be able to sell their homes to the available buyers that are out there. So what is key for you, okay, is to absolutely 100% fair market value your house when you go to sell it. If you are shooting for the moon, still thinking that you can get whatever price you got because the buyer's demand here is just insane, those days are now super officially over. And really, it's if you fairly appropriately price it, it is still leaning into a seller's market. So you still have the advantage for now until it goes into a buyer's market. But we could still get you multiple offers potentially if we appropriately price your home. So sellers, again, you're also going to be probably making the lateral move, which will put you in the buyer situation. Have we surpassed the top of the market? Yes, I think that we are starting to dip down. So sellers, if you want to get to the top of the market right now to make that lateral move and not lose some of your equity as we continue on these months, now is a great time to sell and still lock in an interest rate that's decent. And when the recession eventually hits, of course, interest rates come back down again, and you can go ahead and refinance. Again, buyers, same thing I want to mention to you. If you purchase right now, once that recession hits, which all the indicators are saying that it's going to, you can go ahead and refi and get that lower rate, because historically they always do come down. So sellers, this is a great time, of course, but if you want to say, wait another couple of years, that may not be a bad thing either. I do anticipate this to start coming back up. This will not be a crash of 2008. Buyers, sellers, investors, totally different situation. So don't expect super huge discounts to happen here in our market. Again, I'm still thinking 5 to 10%, but until the Fed can really tackle that inflation, we'll just have to wait and see. Okay, but either way, sellers, now is a great time. Don't lose out on that equity. Get in and make your lateral moves, make your moves while you can, and while inventory is still down below like a 6-month threshold. So again, if you're looking to sell, feel free to reach out to me. Love to come over and love to talk with you for 15 to 30 minutes, bring a CMA, let you know where I think the fair market value for your home is, and get you the home that you're looking for. All right, investors, it's your turn. All right, so if you're actually coming out to buy, say, rental properties, this is a good thing. And in fact, actually, if I were you as an investor, I would probably wait maybe another month or two, wait to see, how much further down, these prices, especially say if you're coming out here to buy investment properties in just pure cash. You can go ahead and you can save money. And that is always a good thing. And rents are still on the rise. As inflation is on the rise, rents are on the rise. You know that, you're savvy investors. Okay. And even if you are going for a loan, the more money that you can put down will also increase your cap rate and all that. And you'll make definitely more profit than if you were just to say, come in and put down, say 20%. So just kind of keep that in mind. In terms of the flip game, and I said it right this time, I didn't stumble on my words like I did every other video. In terms of the flip game though, inventory is on the way up. You could probably find more inventory out there to be able to buy and flip. So get in the game, see what's out there. Give me a call today. Let's go ahead and let's see what's out there and available for you. So renters, you're last. Let's go ahead and get to you. All right, renters. Again, I always say this every single time: when you're out there renting, your rents are continuing to go up, especially since the Fed cannot obviously maintain the inflation rates. So as the rental costs go up and everything else goes up, so is your rent. It's going to go up. Okay. And you are paying 100% interest rate because you're paying your landlord's bill. So it's time to pay your bill. If you have the means, you've got a means of down payment, or you just want to talk to a mortgage lender about your options and your current situations and all of that to see if you can get into a home, now is a great time. Again, interest rates still aren't super stupid, to put it that way. I mean, if they get up to, again, 7-8%, that's a whole nother ball game. If they get into 10, boy, we're in trouble as a nation. But either way, renters, now is a good time. Prices are coming down a little bit. Interest rates, again, are still kind of flatline for now, as long as the investors, keep in the treasury yield market. But talk to your mortgage professional today, or reach out to me. I know wonderful lenders that I can give you a call, and you can go ahead and discuss potential home ownership here in the future. So renters, I look forward to hearing from you. Well, thank you again, everybody, very much for taking the time out of your day to watch this video and go through all this data and my thoughts with you. Again, do I see that the market correction is probably ushering in? Yes, I do. Okay. And do I see that the Fed is doing anything to really kind of tame all this? No, I'm not seeing that yet. So we're just gonna have to pay attention to all that. And keep in mind, the Fed's number with inflation doesn't include big things like houses and gas. So where is our inflation rate really at? And is particularly this administration maybe worse off than, say, in the 70s during the Carter administration? I would like to think so, considering the new math that they seem to be doing. But regardless of all that, if you're looking to buy, sell, or invest right here in the Treasure Valley, feel free to reach out to me today. You can reach me at 208-715-STAR. Again, that's 208-715-7827. And if you'd like to begin your home shopping experience today, please visit my website at www.yourstarrealtor.com. If you're thinking about moving in from out of state right here to the Treasure Valley, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. And also, please hit that subscription button below, the notification bell, so that you're constantly in tune with all the videos that I do come up with that keep you in tune with things just like this and what's happening in the Treasure Valley. Well, I look forward to the day that we speak. God bless you all. I look forward to the day I call you my neighbor. Until then, thank you so much. Bye-bye.